Hi guys, I hope you people are doing well. So we'll continue with our discussing the past examination questions. So now let's just start discussing. This is now a question in front of me. The name of the question is Luwich Company. I repeat, the name of the question is Luwich Company. It says exhibit number 1, background information. Exhibit number 2, data collection and use. Exhibit number 3, potential joint venture. Then at the same time, it says requirement is that it is now first of, December. It is now 1st of September 2005. Respond to the CEO's request for work on the following areas: the usefulness of the external information and the use of unified corporate database. So when we talk about unified corporate database, it's just like using the enterprise resource planning system and the joint venture. So this is what the question's requirement is. Let's just start discussing this question and see what exactly is there in the scenario. So can you just read through these two paragraphs first, and then we'll start discussing further. Yeah, can you just read through these paragraphs? Okay, now it says, Lubitsch manufactures high quality luxury women's footwear. It sells its product on its own website and also to small independent retailers. So what does Lubitsch do? They manufacture this women's footwear and they sell the products on its own website and also to small independent retailers. Now, it says in order to monitor the performance and aid decision making, Lubitsch collects data on all of its footwear ranges and feedback on its designs from customers and retailers. So it monitors performance and aid decision making. Lubitsch collects sales data on all of its footwear ranges and feedback on its designs from customers and retailers. In addition, to ensure that prices remain competitive, Lubitsch has a team of staff to monitor the prices of similar products on competitors' website and to identify design trends in the market, which change frequently from season to season. Generating new footwear designs consistent with changing market trends is critical success factor for Lubitsch. So the critical success factor is that they have to make sure that the market designs are available. Now, the large volume of data collected is entered into a complex spreadsheet by one data entry clerk. So it's one data entry clerk who is entering all this. Can you just read through this paragraph? Okay. So it says Luwage operates a functional structure with different departments for sales, production, purchasing, and design. The spreadsheet is sent by email to the senior manager of each of these departments at the end of each quarter. The senior manager for the sales, production, and buying departments are expected to generate the relevant sales, production, and purchasing forecast by analyzing information contained in a spreadsheet. The senior manager of the design department uses information to generate new footwear designs consistent with market trends. One recently appointed board member at Luwage has commented, I believe that the external information on market trends and competitor prices compiled in the quarterly spreadsheet is of limited usefulness, as I have heard complaints from managers that they have difficulty understanding the large volume of data given to them. They've often received this too late. The companies I worked for previous job has a unified corporate database to share information in real time across all parts of business. A similar database may be useful for Luwage. CEO has asked your management consultant to explain the factors which might limit the usefulness of external information currently used by Luwage and evaluate how the use of a unified corporate database could help them overcome these limitations. Now, I'm allowing you 2-3 minutes. Can you just list down few pointers on this? Can you just list down few pointers on this? Can you just list down few pointers on this? Okay, so have you been able to list down any points? You see, this is what the requirement of the question is. The CEO has asked you as a management consultant to explain the factors which might limit the usefulness of the external information used by Leverage and evaluate how the use of a unified corporate database could help overcome these limitations. Now let's just try to see this. Let's just try to understand this. Basically, this is Leverage company. See, let me just give you a bit of a guidance that what is it that we need to do, which company. Now see, the existing system, how is that existing system? It's a spreadsheet, manual process, too much information. So what actually happens is that when we talk about this Luwage company, it's actually like this. It's a manual process, and then too much information is spreadsheet, all the departments reporting separately. Information is not posted timely. Comparison with competitors is also a manual process. So multiple activities are done on a manual basis. With the unified corporate database, what happens is that all the departments will be connected. Information will also be gathered from the external sources. The reporting will be on a timely basis. Multiple points of entry of a data, and that too in a single database. So need of the business is quick and accurate reporting. The business reporting formats could be agreed. The business reporting formats could be agreed. The system could be used to generate automated reports on the predefined formats. These could be the multiple things that could happen. So what is the requirement of the question again? It says that which might limit, as explain the factors which might limit usefulness of external information currently useful while and evaluate how the use of unified help overcome these limitations. So anyways, I mean, like, these are the some pointers that are going to be discussed, and you'll be discussing them and you'll be talking about them in detail over here. Do you get it? Is there any other pointer that you can think of, please? Any other hello? Please don't sleep. Hello, be cooperative. Is there any other pointer that you can think of? Hello? Testing 1, 2, 3. What? Hello? Can you think of more pointers, please? Have I been audible since the start of the class? Okay, let's move a bit forward and let's discuss further. So now there is this second part of the question, potential joint venture. See, what happens is that these are the problems that we identified. Now it's actually what the issues is. Okay, thank you. So the information gathered could be used to analyze customer demands and predict seasonal trends. Now, can we do this exhibit 3, please? Can you read this part of exhibit 3? Okay, now let's see. It says Lubage has a strategic objective to become the market leader in the sale of high quality children's footwear to small independent footwear retailers. So they want to sell high quality children's footwear to small independent footwear retailers. It has already invested heavily in the market research and developing innovative designs to reduce the risk of not achieving its strategic objective. For example, by having insufficient capacity to produce a larger range of footwear styles, board is considering entering into a joint venture with Sherwill. Sherwill is a large manufacturer of exclusively children's footwear. Its advanced manufacturing machinery and production technique means it can produce high volumes required to supply markets and chain stores. Found on the main streets of most towns and cities, Sherwill's main objective for joint ventures to utilize spare production capacity it has in its factory which it holds on a lease which expires in 3 years' time. So that's a 3-year thing that they are looking at. Recently appointed board members also commented, I'm concerned about potential problems of measuring and managing performance of a joint venture with Sherwin. Fact that two businesses have different objectives is just one example of why these problems may occur, though there will be other reasons. She has asked you to advise on the potential problems with the measurement and management of the performance of joint venture with Sherwin. Chain stores are large retail stores with multiple locations. So on. Now you got to talk about the issues. So you see, the question may seem to be like, okay, it's a joint venture scenario and etc. It's simple that if you are working with somebody as a partner, what is actually going to be the issue that you would face? What is going to be the problem that you would face? That's what you have to answer. So the performance management and performance measurement issues with joint venture. See, what happens is that with respect to the performance measurement and with respect to the performance management, I'm just going to write down overall. Now, different objectives, long term and short term time horizons, Sherwell focused on volume, Lubitsch focused on quality. High volumes may not be able to produce high quality. The brand image may be compromised. With respect to the measurement, different preferences for Sherwell capacity utilization, number of units produced, for which it will be for Lubitsch, it will be the um, quality cost, quality rating, customer satisfaction, the brand image, etc., etc. So overall, the issues that is going to arise is that, see, they are two altogether different type of entities with different objectives. So when it comes to performance measurement issues, there's going to be a huge conflict as to what to be measured, how to be measured, etc. With respect to performance management, the issues could be that what aspect of the performance to control, what aspect of the performance not to control, things like that. What else could be the case? Okay. Uh, Sherwell would be willing to operate for 3 years only. Their focus will be to get things sorted for 3 years only. Lewis wants a long-term impact. It could be the case that at the end of 3 years, Lewis may find it difficult to convince Sherwell or find alternative manufacturing facility to support business levels. Right? This could be the case. What else could be there? Yeah, what else could be there? Okay, Lewis sells using website and Sherwell focus on retail outlets. This could also be the case, right? This could also be the case. So do you people get it? Do you will get it? These are the pointers you would actually use to elaborate and expand your discussion. Okay, good enough. Now let's move a bit forward and let's move on to the next question. So, okay. Um, Okay, this is a question which is about wonder manufacturings. Let's try to discuss this. The company information is being given. Let's discuss about the requirement of the question. It says advise CEO how activity-based management could help improve the strategic performance of Wonder. As required by CEO, assess limitations of using APM method for product and customer types and problem with its implementation. So let's try to discuss this. Can you just read through these two parts also right now? Okay, now it says Wonder manufactures windows and related products. The overheads in the business are high and primarily relate to procurement, customer administration, and product design. Procurement and customer administration overheads relate to all of the Wonder's product. So you see what happens is that the overheads are high proportion, and he says procurement and customer administration overheads relate to all of the Wonder's product groups. Now, design overheads currently relate to only two groups, glass houses and conservatories. Wonder's current costing system has been in use for a long time and absorbs overheads into the product cost on a direct labor hour basis. The current costing system does not involve identifying the factors which drive the cost of company's activities and allocating overheads to product basis on the basis of their usage factors. Now, can you read through these remaining part of the question, please? Okay, it says current product range windows. For many years, Wondog has manufactured UPVC windows frames used for residential house building. Wondog buys the glass from an external supplier, inserts it into a frame, and sells the completed window units to a small number of large construction companies. These window units all have standard designs, specification, and sizes. The market is very competitive, and Wondog must offer a complete range of windows for sale to the construction companies. Next, it says glass houses. 5 years ago, Wondog developed a range of small garden glass houses for non-commercial use, made of attractive and high-quality materials. After initial quality problems due to the use of materials and manufacturing methods new to Wondog, glass house production is now efficient, quality is high, and glass houses now command premium prices. Glass houses are sold nationwide, although through 40 retailers who vary significantly in the size of orders and so on, so on. Now, conservatories and future product development costs, if you could see. Okay, then with respect to conservatories, it says more recently Wondog began manufacturing conservatories using the same materials as its glass house range. These conservatories are expensive and are made to measure for individual customer houses. There's a wide range of finishes and options available to choose from. Conservatories with matched garden glass houses have become popular with customers who can afford them. Unlike Wondr's other products, these are sold directly to individual homeowners. Conservatories are structures made mainly of glass which are attached to the side of residential houses. They form an additional room in a house and are popular in cool climates. Future product of Wonder is looking to move into another new market soon, as the market for making windows for houses is now saturated. This new market will be the manufacture and design of large windows to be installed in the entrance halls of large prestigious commercial buildings. These will be bespoke items designed and manufactured to customers' own specs. Now let's talk about the recent performance. Okay. CEO is concerned by recent fall in overall net profit margin despite modest revenue growth and good control of direct costs. The conservatory's part of the business may not be as profitable as positive contribution may suggest. For example, our procurement department spends a lot of time sourcing special materials and finishes requested by customers. Many conservatories have leaked in the rain, so we have to rectify these faults and work on a new design to prevent this happening. As we have only basic information system, it is unclear how much of these activities are costing. Over 20% of factory space is dedicated to manufacturing conservatories. We may have better off discontinuing these products. The CEO has some experience of ABC in previous role and believes the ABM could help to improve the strategic performance. He is keen to know what limitations of using ABM method for Wonder's product and customer products and customer types and the products. It is now so and so, so and so, so and so. Now appendix 1, number of units sold, total contribution is this, and this. Advise the CEO how activity-based management could help improve the strategic performance of Wonder. Can you list down few pointers? Okay, so now we have got these different things. ABM could give better understanding, helps in cost control by identifying cost driver. Okay. ABM, cost drivers identified, cost is clearly understood, able to classify activities into value adding and non-value adding. Strategically aligning activities with the objectives. Okay, I'm just listing down. Price of each product is better predicted. Better allocation of overheads to the products. Okay, limitations is that too much time, too much data needed, expertise may be lacking. There could be multiple things that could happen, right? Okay, let me just guide you. So basically, again, let's just see the requirement of the question. That what was the requirement of the question? It was like advise the CEO how activity-based management could help improve the strategic performance of Wonder. So the major advantage of activity-based management is going to be cost drivers identified, cost is clearly understood. Now, some of the products may seem to be profitable, but may actually not be making that much money. So such products could be discontinued, modified, or optimized. These are the things that could happen. Now you got to connect this now. So becoming more competitive. Nabil, tomorrow, inshallah. Not today, I mean in the next session. Okay, let's move a bit forward. It says as required by CEO assess limitations of using APM method for one DAX product and customer type. Now, what you could do over here is that you could calculate the contribution per unit. You could calculate the contribution per unit. Now, can you just list down the pointers for this part B? Can you just list down the pointers for part B? Yeah, can you list down some pointers, please? That's 1 point. Okay, we have got the cost as 1 point. Okay, what else? Cost, expertise, available data, lack of expertise. Okay, determination. Okay, cost drivers, difficult to identify. Okay, ideally we should not be writing the limitations in part A. Products are of complex nature, so difficult to capture information. What else could be there? Non-financial information may not be captured. At times, non-financial aspects can have greater impact on a product and its sales. Right? So this is how you will actually go about with this. So you would, I mean, like, I'm just giving you an answer plan and listing down the pointers so that you could be able to estimate things. I mean, like, you could just elaborate on that. You could just elaborate on that. Is that okay now? Okay. So good enough. Let's just keep it till here. We're gonna move forward now in, I mean, like, tomorrow or day after, and I'm gonna be talking about some questions on the transfer pricing, inshallah.